In an era of upheaval for electric vehicle giant Tesla, a new drama is unfolding. Canada is suddenly freezing rebate payments, plunging the company into shock. What is behind this move and what implications will it have for the future of electric vehicles? Amid trade tensions between the US and Canada, the latter has taken a decisive step, excluding Tesla from electric vehicle incentive programs and freezing payments. This comes after the imposition of tariffs by US President Donald Trump, triggering a response from Canadian Prime Minister Mark Carney. At the heart of the Canadian automotive sector, which is the country's second-largest export destination, accounting for $51 billion, Carney is campaigning. While Transport Canada suspends Tesla's rebate payments until each application is reviewed individually, the situation casts a shadow over Tesla's prospects in North America, causing stock fluctuations and undermining investor confidence. However, there is more to this dispute than just a disagreement between Tesla and the Canadian government. Global supply chains, US-China rivalry, European standards for electric vehicles, and the overall state of the automotive industry all play a role in the escalating conflict. How did one of the world's leading electric vehicle manufacturers find itself at the epicenter of an international diplomatic storm? What decisions and events led to the company losing access to Canadian electric vehicle support programs? And will the new tariffs proposed by the Trump administration disrupt the delicate balance in the North American automotive market? These questions prompt reflection on the broader picture. How will the global economy react? What options remain for Tesla, and how will global trade wars affect not only one company but the entire industry? To understand what is happening, it is necessary to examine the background of Canadian restrictions on Tesla. Tesla, led by renowned entrepreneur and Donald Trump advisor Elon Musk, is an American flagship of the electric vehicle industry, a company that has largely defined the development of the sector worldwide. However, in its pursuit of innovation and leadership, the company often finds itself at the epicenter of disagreements with government regulators. A recent example is the strained relationship with the Canadian government. The reason for this is a multi-billion-dollar project funded by Canadian taxpayers to support the electric vehicle industry, as well as the political activity of Tesla CEO Elon Musk and new U.S. tariffs affecting Canadian goods. In response, Canada has taken a principled stance towards Tesla. This involves not only blocking Tesla's access to government subsidies but also canceling already granted benefits worth $43 million. Canadian Prime Minister Mark Carney, viewing the automotive tariffs imposed by President Donald Trump against Canada as an attack, convened an emergency cabinet meeting. President Trump has announced 25% tariffs against our auto industry, and that is a direct attack. To be clear, a direct attack, he said. On Thursday, March 27, Carney announced on social media, "I have convened Canada's National Cabinet Committee, and we are taking steps to counter President Trump's attack on our workers and industries." Despite all the difficulties, Carney expressed confidence in the country's ability not only to overcome the current crisis but also to create a stronger and more sustainable economic system. The culmination was a large request from Tesla filed immediately after Canada announced the imminent exhaustion of the budget for the Incentives for Zero-Emission Vehicles (IZEV) program. The application for $43.1 million Canadian dollars, including $30 million Canadian dollars in subsidies, immediately attracted the attention of government officials. According to some reports, Tesla was able to sell 8,753 vehicles through just 4 Canadian dealerships in a single weekend, which meant selling a car every 30 seconds. The Canadian Automobile Dealers Association expressed doubts about the realism of such figures, hinting at possible manipulation of the system. Minister of Transport Chrystia Freeland initiated an investigation and temporarily suspended all payments. This decision was a serious blow to Tesla's financial plans and led to increased tensions in trade relations between the US and Canada. However, it appears that the matter is not limited to a trade conflict but also concerns the aggressive sales incentive strategy used by Tesla. Recently, Tesla has taken a number of steps indicating a desire to maximize government incentives for electric vehicles in Canada. The number of applications for these incentives has surged dramatically, jumping from 300 to an impressive 5,800 in a short period. This activity did not go unnoticed. The Canadian government viewed these actions as an attempt to manipulate the existing support system and decided to exclude Tesla from the electric vehicle incentive program. It is worth noting that this is not the first time Tesla has shown ingenuity in using government benefits to its advantage. in 2019, at the dawn of the Canadian IZEV program, the company faced the challenge of fitting its Model 3 within the price range set by the government. To qualify for the program, the cost of an electric vehicle could not exceed 45,000 Canadian dollars. However, the Model 3 SR Plus, offered by Tesla to Canadian consumers at the time, was priced at 52,000 Canadian dollars. As a solution, Tesla introduced a so-called compliance model with a cost of 44,999 Canadian dollars. This car, created solely to meet the program requirements, offered a very limited range of just 151 kilometers. This figure was clearly below the standards set by Tesla itself. Nevertheless, thanks to this trick, the company was able to access millions of dollars in government incentives. Thus, Canadian taxpayers unknowingly financed Tesla purchases totaling 115 million Canadian dollars since 2019. Tesla has certainly been in the spotlight, becoming the largest beneficiary of government incentives for electric vehicles in Canada, receiving an impressive 713 million Canadian dollars. However, such aggressive use of financial levers has not gone unnoticed and has attracted the close attention of the Canadian authorities, becoming a key element of the current investigation. In this regard, a legitimate question arises: what are Donald Trump's true goals, and how does he intend to transform the economic landscape of the United States with new tariff barriers? On Wednesday, March 26, the U.S. President announced the introduction of a 25% tariff on imported cars, stressing that this decision is permanent, which once again demonstrated his uncompromising position on trade policy. Moreover, Trump made it clear that if the European Union cooperates with Canada, even larger punitive tariffs will be imposed on the EU. What is behind this decisive step? According to the president, his goal is to stimulate the development of American automotive manufacturing and rid the country of dependence on foreign components. However, economists and industry experts fear that such measures could lead to undesirable consequences. The introduction of tariffs, in their opinion, could harm the American economy, cause prices to rise for consumers, and negatively affect the competitiveness of domestic producers. The Trump administration's desire to bring production back to the United States through the introduction of tariffs may have unexpected consequences for automakers. Even American brands such as General Motors, Ford, and Tesla are heavily dependent on imports of components, and new tariffs could increase their production costs, which would inevitably affect profitability and sales. In a global supply chain, price increases become almost inevitable. This, in turn, could undermine the competitiveness of American companies and reduce consumer purchasing power. According to the plan developed by the Trump administration, the new tariffs will take effect on April 3, which could lead to an escalation of trade wars and a weakening of the U.S. position in the global automotive market. Thus, the actions of the Trump administration aimed at stimulating domestic production risk launching a process that in the long term will become a serious challenge for American automotive giants and the global trade balance. How are Tesla's shares faring in the current turbulent circumstances? The company is going through hard times, facing a significant decline in both market value and sales worldwide. Economic storms and political barriers arising in Canada, Europe, and the United States directly affect Tesla's financial results. The company's shares have recently shown increased volatility, as if trying to find support in unstable ground. On March 25, 2025, quotations jumped by 12%, which was the most noticeable increase in recent times. However, despite the surge of optimism, the shares are still trading 44% below their peak value recorded in December. The decision of the Canadian authorities to exclude Tesla from electric vehicle incentive programs has dealt a significant blow to the company's position in the stock market. Following the step, Tesla's stock plummeted by 5.6%, reaching $272.06, breaking through critical technical support levels. This resulted in a significant reduction in the company's market capitalization. Global trade tensions are also contributing to the instability of Tesla's stock, causing it to follow an unpredictable trajectory like a ship in a stormy sea. However, the European market is showing alarming trends for Tesla, with sales steadily declining. In the early months of 2025, the decline became particularly noticeable, with new Tesla car registrations in Europe collapsing by 47.1% to just 11,743 units. This led to a reduction in market share from 2.5% to 1.4%. The reasons for this decline lie not only in the commercial sphere but also in the political one. Elon Musk's outrageous statements and political démarches have sparked a wave of criticism across Europe. His support for the far-right AfD party in Germany and attempts to interfere in the political situation in the UK have dealt a serious blow to Tesla's image. Competition is also intensifying. The aggressive pricing policies of Chinese electric vehicle manufacturers and the emergence of new models from European brands are creating serious challenges for Tesla. The tightening of environmental standards in the EU and the prospect of introducing additional taxes on imports from China further complicate the company's strategy in the region. In these difficult conditions, Tesla needs to take decisive steps to maintain its position in the European market. The company will have to revise its strategy, taking into account the political and economic realities as well as the increasing competition. While American consumers are showing a cooling interest in Tesla electric vehicles, the global market continues to keep the company afloat. In 2024, Tesla's sales in the U.S. fell noticeably, but global delivery volumes remained almost unchanged. January statistics show an 11% decrease in new Tesla registrations, while competitors are gaining momentum. The drop in demand for Model 3, Model X, and Model S is particularly noticeable. Model 3 sales fell by 17.4% to 189,900 units, Model S lost 19.8% to 1,955 cars sold, and Model X plummeted by 31.2% to 12,426 vehicles. The only bright spot was the Model Y, which maintained relatively stable performance. Despite internal difficulties, Tesla was able to make a strong statement with the Cybertruck and maintain its position on the international stage. In 2024, the company delivered 1.79 million vehicles worldwide, just slightly less than the 1.81 million the year before. It is clear that global demand is offsetting losses incurred in the United States. Despite some sales declines in the United States, Tesla still maintains its global leadership in the electric vehicle segment. Analysts predict that by 2025, the company will not only be able to stabilize its position in the American market but also compensate for current losses by launching new, promising models. A logical question arises: how should the current situation be assessed, as a serious challenge or as an opportunity for further growth and development of Tesla? The current volatility of the company's stock reflects investors' concerns about its future prospects. However, some investors see periods of falling stock prices as an attractive opportunity to acquire assets in the long term. Tesla's leading position in the electric vehicle industry, supported by significant investments in the development of autonomous driving technologies, inspires hope for its ability to recover and further strengthen its position. At the same time, one cannot ignore factors such as Elon Musk's unpredictable management style, his political statements, and aggressive pricing policies, which indicate that the company is moving along a path full of uncertainties and potential risks. In addition, Tesla faces serious competition from Chinese electric vehicle manufacturers such as BYD, XPeng, and NIO, which offer more affordable models. These companies are actively gaining market share in Europe and North America, putting pressure on Tesla's sales and demonstrating that global competition in the industry is becoming increasingly fierce and intense. In the coming years, Tesla will face the need to navigate not only technological and production realities but also the turbulent waters of global politics and economics. Government policies and global trends in the automotive industry will be decisive factors for the company's further development. The reaction of world leaders to the events unfolding was not long in coming. Brazilian President Luiz Inácio Lula da Silva has strongly disagreed with the United States trade policies, noting his serious concern over the American government's behavior, which undermines free trade, weakens multilateralism, and ultimately harms global commerce. European Commission President Ursula von der Leyen also expressed regret over the U.S. decision and stated the European Union's intention to protect the interests of its consumers and businesses. Hildegard Müller, head of the German Association of the Automotive Industry (VDA), emphasized that the introduction of tariffs would negatively impact not only manufacturers but also all links in the global supply chain. German Economy Minister Robert Habeck voiced serious concerns about the potential negative consequences of the decision, especially for consumers in North America, stressing that it could harm growth and prosperity in various sectors of the economy. He called for active support from the European Commission in upcoming negotiations, noting the need to adhere to a constructive approach focused on finding mutually acceptable solutions to avoid escalating a tariff war with the United States. According to the minister, such tariff battles ultimately harm both the U.S. and the European Union as well as global trade as a whole. The American side's decision is under close scrutiny not only by political leaders and economic experts but also by all participants in the global trading system who recognize the potential consequences for global economic ties. Meanwhile, in Canada, the reaction to Tesla and its CEO Elon Musk has taken a radical turn, moving beyond ordinary political discourse. Protests and acts of vandalism targeting Tesla dealerships have swept across various regions of the country. In Ontario, a group of protesters damaged more than 80 vehicles, slashing tires and scratching bodywork. In Montreal, another dealership was attacked with paint, followed by a sit-in protest in front of the building. According to protesters, their actions are driven by Elon Musk's support for political views that contradict Canada's policies aimed at supporting domestic production. Canada, in turn, views Tesla more as an element of protecting its own economy than as a partner. The exclusion of the American auto giant from national electric vehicle incentive programs is part of this strategy. What awaits Tesla in the future? Various scenarios are possible. The company may attempt to challenge the Canadian authorities' decision in court, appealing to international trade norms which Tesla believes make its exclusion from incentive programs unfair. However, the Canadian government appears determined to stand its ground, and the prospects of the situation changing in Tesla's favor in the near future seem bleak. It is quite likely that Tesla will revise its production and sales strategies, restructure its North American supply chain, and attempt to mend relations with the Canadian government. Simultaneously, the company may focus on regaining lost ground in the Chinese and European markets using a more aggressive pricing policy. The strategy that Tesla chooses will largely determine the company's future on a global scale. Lowering prices to compete with Chinese manufacturers could negatively impact profitability and lead to financial difficulties. Nevertheless, the company still has the opportunity to defend the uniqueness of its brand by focusing on the elite segment of electric vehicles. The current moment is a turning point that will determine not only Tesla's position in Canada but also the face of the global automotive industry in the context of trade wars. Tesla's ability to build relationships with Canada will be a determining factor in its future and place on the world stage. In the near future, we will witness developments in the relationship between Tesla and the Canadian government as well as the U.S. response to what is happening. Will Tesla be able to overcome this crisis, or is its golden era coming to an end?